It is general known that people who are successful have more than one means of producing money and do not rely on a single source of income to provide for all their financial needs. Almost every successful and wealthy person has assets that have generated money and long-term wealth for them. But what exactly are these assets that are producing money and helping individuals become wealthy? Let's discuss the top 10 assets that are responsible for individuals becoming wealthy. According to Robert Kiyosaki, an asset is anything you own, such as a piece of property or a piece of tangible personal property that may be sold for a profit. On the other side, a liability results in a loss of financial resources for you. Those who are already wealthy tend to prioritize the accumulation of assets and the reduction of their obligations as a means of expanding their wealth. Now that we have established how individuals get wealthy, let's speak about the assets that they utilize. First and foremost, real estate. Real estate is a tool that has made many people wealthy over the years, and for good reason. As population increases, more and more people need a place to live, which creates many ways to create wealth using real estate. As a result, real estate is a tool that has made many people wealthy over the years. The first method is to rent out your home to renters and collect a check from them every month. Because this method does not need any continuous effort on your part, it is considered a passive kind of income. The use of debt is the second strategy that individuals use in order to amass riches via real estate. While purchasing real estate, the majority of investors go into debt by obtaining a mortgage loan. Because of this, companies are able to purchase real estate even if they do not have the whole amount necessary to do so, and they may have renters pay down their loan while simultaneously accumulating equity in the property they purchase. For instance, if you purchase this home for the asking price of $100,000 and made a down payment of $20,000, this indicates that you obtained a loan in the amount of $80,000 for the subsequent 15 years. This results in a mortgage payment of $445 per month, excluding any applicable taxes. In light of the fact that renters are responsible for paying your rent, this implies that they are also responsible for paying your mortgage. Hence, you are gaining an additional $5,333 a year in equity in addition to your monthly cash flow. Since the value of real estate tends to increase with time, a property that has been owned for an extended length of time may often be sold for a considerably greater price than it was purchased for. There are a wide variety of distinct categories of real estate. Real estate can be broken down into three categories: residential, commercial, and agricultural. Residential real estate refers to our properties in which people live. Commercial real estate refers to our properties in which people conduct business, such as an office building or a restaurant. And agricultural real estate refers to our properties that can be rented out to farming businesses so that they can expand their operations while collecting rent checks. Businesses come in at number 2. Building one's own company is now, at this very moment, one of the most successful methods for individuals to generate income. Starting and growing a company is not a passive method of income generation for the vast majority of individuals. Starting a company from the ground up and growing it up requires a lot of effort. But if we do things the correct way, we can make this firm much easier to run by converting it into an asset that generates passive income. Number 3. Bonds. Bonds are another kind of investment that individuals put their money into as part of their plan to get wealthy. Whenever a corporation or government agency wants to raise money to support a project, they would often sell bonds to investors to obtain the necessary funds. A bond is not the same thing as a share of stock. While a share of stock is a fractional ownership of a business that permits you to participate in the profits or losses of the firm, a bond is a debt that a corporation owes to investors. When you buy a bond, you are effectively lending money to the firm or the government, and you will be repaid with interest on the principal amount at a future date that you choose. As bonds are only loans that need to be repaid, rather than ownership stakes in a firm, bond investments are often seen as being less risky than stock investments. Bondholders, on the other hand, do not experience the same loss of value when a company's market value decreases. In fact, there are some instances in which bondholders actually experience an increase in value because the company is still obligated to pay their debts, regardless of whether or not the company's market value decreases. In the event that the firm does not declare bankruptcy, it will be obligated to pay the bond issuers the money that is owed to them. Bonds are generally considered to be secure investments. However, the return on investment that they provide is often smaller, coming in at an average of 3% each year. Bonds are often held by investors as a means of diversifying their investment portfolios and lowering their overall risk exposure. In the same way that one may purchase stocks on major stock exchanges, one can also purchase bonds there. Digital items comes in at number 4. The use of digital goods is rapidly becoming an extremely valuable tool for any company or person. Have you ever taken note of the fact that a number of the famous celebrity entrepreneurs, such as Damon John, are going into the industry of providing digital information? This is due to the fact that digital items are very lucrative investments. With them, you just need to make an initial investment and then continue to make money off of them on a daily, weekly, or monthly basis. There is a wide range of diversity present within the realm of digital goods. Number 5. Stocks. People have been becoming rich off of stocks for years. For example, did you know that if you had invested $220 in Apple stock in 1980, it would be worth more than $180,000 today? When a person purchases a stock, they are purchasing a little piece of a firm, which makes them a small part owner of the company. As a result, they are entitled to development and profitability of the company. Stocks are not as difficult as they may look. If a firm that is worth $10 million issues 1 million shares and you hold 50,000 shares of that company, then you are the owner of 5% of that company. In other words, your stake in this corporation is equal to $500,000 in value. There are two primary routes that individuals use to get wealthy via the use of stocks. If the value of the firm in which you own shares rises, for instance, from $10 million to $50 million, then the value of your 5% ownership stake in that company will also rise, going from $500,000 to $2.5 million. For instance, the value of the corporation Apple in January of 2010 was around $192 billion, but the value of Apple in March of 2020 is almost $1.3 trillion. This change occurred over the course of 10 years. This indicates that investors who purchased Apple stocks in January of 2010 have had an average return on their investment that is equal to or more than 600% over the course of the last 10 years. As of March 2020, an investment of $10,000 would be worth something in the neighborhood of $67,000. Receiving dividend payments is another method through which investors may profit from stock trading. The majority of businesses give their shareholders a portion of the earnings on a quarterly basis. Investors who are entitled to the dividends get a check every 3 months in addition to the growth of their investments. Investors have the option of reinvesting the cash flow they receive from dividends into the purchase of additional stocks, which will enable them to further compound the earnings they already have. Alternatively, investors can choose to spend the passive income they receive from dividends as they see fit. REITs come in at number 6. This abbreviation refers to a real estate investment trust, which is a firm that owns and manages real estate and provides opportunities for investors to purchase shares in the company and earn dividends. When an investor purchases a REIT, they are really purchasing a share of a firm that owns and manages real estate holdings. A REIT is comparable to a stock in this regard. The cash flow that is produced by the properties is collected by this firm, and then the company's profits are distributed to its shareholders in the form of dividends. As a result of the fact that real estate investment trusts may be purchased and sold on major public markets like the New York Stock Exchange and the Nasdaq, it is much simpler to acquire REITs for one's own portfolio. Copyrights is point number 7. Copyrights are laws that protect intellectual property, which may include things like poetry, music, and literature, among other things. Because of this, these copyrights may also be leased out, which would increase our income. This is a very valuable asset. A good illustration of this is J.K. Rowling. As the author of the best-selling Harry Potter book series, she is entitled to royalties for each copy of the book that is sold and so benefits financially from its popularity. After then, the novels were adapted into movies, which resulted in an additional layer of royalties for her due to the fact that her intellectual property was exploited in the production of the movies. Royalties also come from the sale of items based on her characters. After this, Universal Studios developed the wizarding world of Harry Potter. The attractions in this theme park are based on her intellectual property, which means that she receives even more royalties as a result. Reportedly, Rowling earns royalties from ticket sales, merchandise sales, food sales, and even beverage sales within the park because they all use her intellectual property. Rowling also reportedly earns additional royalties from her licensing deals to produce the Broadway shows that are based on her writing of Harry Potter and the Cursed Child. Number 8. Index funds. This kind of asset takes things a step further. In the same way that we may gain money with stocks, we can also lose money with them, and purchasing individual stocks can be a very dangerous endeavor. There is no one who can accurately forecast what will happen in the market, and unless you are a master investor like Warren Buffett or Ray Dalio, attempting to forecast how a particular firm will do is likely to be a dangerous move for you to take. Index funds are an asset in and of itself for this very reason. Index funds are a kind of mutual fund that mirror or follow the performance of a certain segment of the financial market. One example of this is the S&P 500, which follows the performance of the 500 largest firms in the United States. This indicates that if one business has a loss of 20%, the others will also experience a loss of 20%. Your entire investment will not decrease in value regardless of their worth. The following is a list of advantages of index funds. Immediate diversification. Since you are not purchasing just one firm, but rather a whole market sector, your investment is safer than if you invested all of your money in a single business. The second point is having minimal operational expenditures. This sort of fund does not need any active management since it is designed to replicate the performance of a certain market sector. There are no management fees that will reduce the amount of money you make. 9. The audiences that marketers may reach via social media. This is a relatively new phenomenon. A few years ago, many people didn't believe it was genuine. But when influencers started earning as much money as A-list celebrities, people began to take notice, and now celebrities are becoming social media influencers. Not only is it possible to get great levels of attention with social media, but the degree of connections that we can develop on these platforms is tremendous and really useful. This is because social media allows us to connect with a large number of people. Until the last 10 years, there was no way to communicate with a company or your favorite celebrity just by watching them on television. Imagine if you sent a message to your favorite musician and that they truly responded to your inquiry by sending you a message in return. How much more likely are you to purchase their CD? go see their movies, or even buy their items immediately when they come out now that we live in a world where this is a reality. One of the wonderful things about social media is that anybody can use these platforms to their advantages and establish successful companies around them. This makes social media one of the most appealing means of online communication. Anybody with a smartphone that has a camera may start constructing an asset that can generate cash via the use of social media. Patents and trademarks come in at number 10. You may submit an application for a patent to protect an idea that you believe has the potential to be financially rewarding. If your patent is granted, corporations will be required to pay you royalties in order to utilize your creation. This may take the form of a concept, a physical object, or a piece of software. If your product has potential commercial value, you may be able to license your patent to other businesses in order to generate ongoing revenue from it. Have you ever come across the name Linky before? This rather simple innovation has resulted in earnings of close to $3 billion. The same thing happened with the Furby. At its height, this small patented invention brought in around $500 million annually. Trademarks are protected in a somewhat different manner than other types of intellectual property, including names, phrases, and even logos. There are a lot of famous catchphrases that have been registered. For instance, Disney has the trademark on the term Hakuna Matata, which means that no other firm may use it for commercial purposes without first paying Disney a license fee. They were the resources that may help you achieve financial success. You are welcome to post a comment below if you have any thoughts or ideas to contribute. If you want to see more content similar to this video, please subscribe to our channel, make sure to click the notification bell, and don't forget to press the like button. Thank you! We'll catch up with you at the next one.